Greetings, my name is Kevin Matthews and I am the tax professor. Class is still in session because the learning never stops. I want to welcome you back, and essentially what we're going to talk about today is the employer credit for paid family and medical leave. Now, FYI, before we get anywhere else and go forward, this is for companies, not for the individuals. So if you're an individual and you're just like, oh, I was on medical leave, no, you don't get a tax credit for going on medical leave. What this is, it's a credit that actually came into effect, and what they're trying to do is they're trying to encourage more small business owners to allow people to take that medical leave. And one of the big, and look, I'm old enough to remember this. I remember when the FMLA, which is the Family Medical Leave Act of, I believe it was 93, was being debated. And, Bill Clinton had just become president. One of the things that Bill Clinton was very famous for is that he, kind of saw a European way of doing certain things. And one of the ideas was, in Europe, they're like, hey, every other developed country in the world except for the United States doesn't pay, give paid medical leave or paid family leave for various things. There's actually quite a few companies that do, but it's always the larger companies. And the reason why a lot of small businesses don't do it is they said, why am I going to pay somebody who isn't here and therefore isn't, they're not helping my bottom line, and so they're just, I can't afford to. And as a small business owner, I can empathize with that. My personal opinion is that if where the market can, the market will provide. And something that I've actually been seeing is that smaller and smaller companies are starting to want to talk about this sort of thing. But what's really hit the discussion now is this tax credit that they've come up with, which I'm actually very happy with. In order to qualify for the credit, first of all, it's for wages paid in the tax years beginning in 2018 and 2019. You can claim credit for the portion of wages you paid to certain employees during any period in which those employees are on family or medical leave. Qualify for the credit. The amount you must pay your employee must be at least 50% of the wages you normally pay them. Okay? So you don't have to pay them 100% of their wages in order to qualify for this credit. Typically speaking, depending on how long term it is, if it's like a week or two, I've seen where some not small, but more medium-sized companies are just like, hey, if it's a week, we'll give you a week or two of family medical leave, paternal leave, maternity leave. There's different types of leaves that a lot of these, the big companies have been offering for a while. Some of the mid-market companies, in order to compete to get some of that talent, are starting to offer it. And then small businesses are even taking notice of it and saying, hey, look, we've had this person who's worked for us for 20 years. Last thing we want them to do is have this issue because they got to go take care of their old dad for, 6 weeks. So we want to do something to take care of them. My personal opinion, and let me take off my accountant hat for a moment, put on my HR hat. If you're going to do this, set it up as a policy. Okay, don't do this for, we're going to take care of our one-off employee who's just been loyal to us for all those years. That is ripe for so many problems in the grand scheme of things. You want to put a policy into place that actually helps, that people can qualify for if they work for you for a certain amount of time or whatever. So to qualify for the credit, you must pay them at least 50% of the normal wages. In addition, you must have a written leave policy stating certain requirements. All qualifying employees must be given at least 2 weeks annual paid leave, medical leave, and all less than full-time and qualifying employees must be given a commensurate amount on a pro rata basis. Now, my HR side that I was just telling you was what you should be doing regardless of this credit. Okay, obviously to qualify for this credit, these are the things that you have to do. Okay, so the credit is 12.5% of the normal amount of wages paid to the employees while they're on leave. It is increased by 1/4 of a percentage point, but not above 25 for each percentage by which the rate exceeds 50%. So a good example, an employer pays $10,000 of wages to qualifying employees during a period that they're on leave. This is 50% of the wages normally paid to the employees for their services. They can claim a credit of 12.5% of the $10,000, which is the $1,250. Now, some of you, especially those of you who live in the Washington, D.C. area, are like, who the heck works on $20,000 to pay? Again, outside the DMV, folks. Okay, outside the DMV is like a completely different world, okay? In Abilene, Texas, you know, starting wages for some people that are right out of community college are going to be around $20,000, $25,000, okay? So this is not something that's that uncommon, and I'm sure that they use the numbers that they use in here in order to keep math easy too. However, they say it pays $12,000. Another example: $12,000 of wages to qualifying employees during a period. This is 60% of the wages paid to the employee. It exceeds the 60 exceeds the 50 by 10%. So, as the percentage of 12% is used to determine, but is increased by 0.25 percentage points by each point that it exceeds 50. So, 10 times 0.25 is 2.5. So then they add the 2.5 to the 12.5, and therefore make it a 15% credit. So you can see how it actually helps you if you pay them more when they're on leave than if not. Now, again, because the credit is going to be, it's a dollar for dollar credit, which is very much more valuable than a tax deduction. However, it's only going to be a portion of the wages that you pay. So it's kind of, you know, first of all, I would never do anything simply for tax purposes. My personal opinion is if you want to do something really nice for your employees and take good care of your employees and do good things for them so that they continue to work hard for you, this is a good plan. This is a good way to take advantage of good policy decisions that you're just making, okay? Again, you want to make sure, you know, and they talk about it here that, you know, have to have a written leave policy. Qualifying employees must be given at least 2 annual weeks paid vacation. All this sort of stuff, obviously, you're going to need a CPA to look at to make sure that it looks good. You also want an expert in HR to look at this too, if you don't have one working for you. And if you're a small company, you may not, because you just don't have enough people to justify it. Again, I offer that here at Beta Solutions because it's something that I do. I would seriously make sure that you have that put in, not just for this kind of a policy, but any kind of leave that you're going to be doing. The biggest issue that you want to do is you want to make sure it's non-discriminatory. And believe me, there's a lot of times where policies become discriminatory, not through the intentions of the individuals, but just through, you know, simple mistakes, simple things that somebody could have taken a look at and said, yeah, if you instead of saying it this way, let's do it this way. That way we get to encompass and encourage a lot of the things that we want to get taken care of, okay? Again, my name is Kevin Matthews. I am the tax professor. The class is still in session, so the learning's not going to stop. If you want to reach out to me and contact me, you can reach out to my website at www.betasolutionscpa.com. Again, that's www.betasolutionscpa.com. You can also leave a comment in the comment box below. Folks, if you like this video, please go ahead and hit the like button. And if you like the series, please go ahead and hit like on the series, or hit subscribe, and then we'll go ahead and we'll send you guys updates about these as they periodically come out. Again, thank you very much for watching.